Hi, today we are discussing about Infosys Q3 FY19 performance. The results were announced on Friday, and it is interesting that while the results had fair share of positives, there were certain negatives which ought to be taken note of. Overall, the result we would conclude was a definite positive, and that sets the stage for a rally in the stock in the near term. Coming to the positives first. The revenue traction was extremely healthy, with Infosys growing its constant currency revenue by 2.7% sequentially and 10.1% year-on-year. Digital was obviously a big driver of this revenue growth, with digital piece growing by 33% year-on-year and 5% sequentially and forming 31.5% of the total revenue. The deal flow momentum was strong, with Infosys announcing $1.57 billion worth of large deals in the quarter. The company also upped its full-year revenue growth guidance to 8.5% to 9% as against earlier guidance of 6 to 8%. Finally, the payout was extremely healthy, with Infosys announcing a 4 rupees per share dividend and buyback worth rupees 8,260 crore. But there were certain negatives which ought to be taken into consideration as well. The margin guidance for the full year has been retained in the band of 22 to 24%. In fact, in the quarter under review, Infosys reported 110 basis point sequential decline in margin to 22.6%. Of this margin decline, about 40 basis points was due to higher depreciation, as Infosys has decided not to sell the assets Panaya and Skaba. But what is pertinent to note is the fact that because of certain payouts and continuous investment, Infosys is guiding to a weak margin in fourth quarter as well. Now, the key question that beckons attention is what to do with the stock. We are quite comfortable with the commentary on demand and execution of Infosys, although margins might remain soft. We feel that a hefty payout, which works out to pre-tax 4.4% payout yield per share, will limit the downside for the stock. Hence, we feel that at the current valuation of 17 times FY20 earnings, it is likely to close the gap with the leader TCS, and hence we recommend a buy on the stock. Thanks for watching.